Good morning, ladies and gentlemen, and welcome to this live trading. Today, it's Friday, the 11th of November, and we had some really excited news yesterday that they slapped down the US dollar. So we're going to have a look at the charts soon. So how is everyone doing today? Is everyone happy that it's Friday? So did we had a good trading week so far, guys? Yeah, I see the first smiles here. Good morning, Payot. Good morning, Winnie, Diego. Well, guys, just to make sure you all know about the live podcast we put every Monday. So next Monday, I will record the new podcast. But please now, especially if you are new here, or even if you watch me for a quite of time now, but you really didn't go to listen to the podcast I put up every Monday. I mean, now you have a bit better understanding of how it's going on in the market, of how things are moving. So if you're going to do yourself a favor and you're going to go just to listen to 3-4 minutes, that's the max length of each podcast, then you can put together that puzzle, and maybe you're going to start having better understanding. You start understand better how the things they come together and how the pieces on the puzzle connected. So it's going to help you a lot in your trading, really. And to be honest, guys, the podcasts are definitely for you. It's not for anyone else. So it's just a tool to help you, and especially the ones I do with the market major news events for the week, I believe it's going to help you a lot. Okay, in case you don't know where to find them, I'm sending you here the page. So, and I will share the screen very fast. So here it is in our website. You just scroll down and you download it from Spotify, Apple Podcast, Google Podcast, and so on. Okay. Also, please make sure, guys, you do have downloaded your mobile application, so you can monitor your trades, or you can initiate trades if you like. But definitely for investment accounts, it's mandatory in my opinion. All right. So, and of course, I almost forget it today, the disclaimer, just to make sure that you understand this webinar and this live, it's for general information only, and it's not intended to provide trading or investment advice or personal recommendation. Ladies and gentlemen, let's have a look at the economic calendar. Yesterday we had the Fed. Actually, I can just change the date here so it will be more visible. Here it is. Yesterday, inflation rate way less than what they expected in the US. Core inflation rate 0.2% lower. So this actually, it's good for consumers, but it's not good for the currency of the country. It's good for consumers because hopefully the goods and products, they're going to become cheaper, but the country's currency is depreciated. So today, earlier, we had the GDP in the UK. This GDP for the month came to minus 0.6%, worse than they were expected, although we had some slightly increase, but not based on the preview, based on the forecast. Okay, so in my opinion, I can still see the pound just pushing lower. Okay, if this number here, the actual number, was greater than the previous number, then we could see some trend change in the market. But when we see just slightly different than the forecast, that creates lots of volatility in the market, but it's not what is going to be a major factor to change a trend in the market, if that makes sense. All right, so let's move on. From the Premium Analytic Portal, we go to morning briefing, and the first, of course, it's going to be the inflation report. Leaves Fed on track for 0.5 percentage point rate raise in December. US downgrades Russia to non-market economy. South Korea to sell arms to US for Ukrainian forces fighting Russia. TikTok struggling with slowing digital advertising industry, lowers ad revenue outlook. And the hot news for the last 72 hours, it's of course the FTX exchanger tapped into customer account to fund risky bets. Oh my God, what are they doing? Setting up on its downfall, of course. It's just make sense anyway. So for those who are investing in the digital currencies, I also do it myself. If you want to ask me anything about that, you can just please go ahead and do it. No offensive about anything. Okay. If you are trading them or investing with them and you have you have any questions, you can just throw them on the chat box. Good morning, guys. Good morning, everyone who just joined us right now. So let's go to the chart. Guys, yesterday we talked about this US dollar index, and we said we expected to see more push to the downside. Yesterday, with the news event, this push came in an enormous amount of volatility. That's how we see this candle here, that it broke through finally our support zone, and we expect it. Now we are officially in a downtrend, so we can start the swing trading strategies on the 4-hour chart, on the daily chart. Even though on the 1-hour chart, I don't tend to do it that much, but on 4-hour chart, swing trading, it's totally fine, and it's very valid. So bearish engulfing, break below support, too much force here. We are making a lower low on the daily chart now. We have another level here to break, but everything shows that weakness in the dollar, at least for today, it's meant to come. In the Asian session, we didn't see any major retracement, correction. So in my opinion, everything is bearish for the dollar. So the DAX, we had this massive push to the upside. We broke above all these levels. The next level for the DAX, it's this one here. So now we have the freedom to start buying on a corrections. Yes, because some people, maybe they're going to just, when they hear Theo says, we can start buying, they're going to just press the button. They're going to forget what is risk management, where is stop loss. If they are a stop loss order on the MT5, guys, we don't do that. Okay. So in a meaningful way and in a technical analysis way, as we say all the time, okay, if you go down to the 4-hour chart, you can draw your actually, how can we keep it as simple as possible? Well, we go to any time frame we want to. First, we have to be crystal clear on which one is our time frame that we do market analysis. So for me, I do market analysis basically on the daily charts, on the weekly charts. I don't do market analysis on the 4-hour charts. Why? Because 4-hour chart, in one day, it has 6 candlestick patterns. So maybe we can have one candle up, one candle down, one candle doji, one candle pin bar, one candle. It's less reliable if I want to the more, put it different, the more weight on the candlestick pattern can be found on the daily and weekly charts. Okay, so if I see a bullish engulfing on daily or on the weekly chart, especially on the weekly chart, the bullish engulfing in an uptrending market, I will be keen to find buying opportunities and buying opportunities only on the lower time frame. So it helped me to be with the major force in the market, because we can see on the 4-hour charts many swings to the opposite direction than the predominant direction of the market. So it's the signals are not that reliable. So higher time frames provide direction, lower time frame provide only execution. So we find out on the daily chart that we want to be a buyer. If you are trading only on the 4-hour chart, that's fine. You can just use few tools that we structure the market. The one is the fib retracement. You want the price to come somewhere to a fib level. The other tool is the broken swing high, because usually it has a lot of activity to be continue from that point. Also, we have trend lines. Some people, they can see this one move to the upside. So we have this, let me just delete this one. We have this trend line support. It's a valid trend line because the market created a new high after it touches here in the swing. So this trend line here can host the 61.8. It's somewhere in the same area with the 50% in the last swing. We just put areas. All right, so we are in this area. So some people, for swing trading, they can definitely wait for price to come here and then execute. Other traders, like 5-minute chart traders, maybe want to see the minor swings, small fluctuations. So they can wait for this. Let's say we have a higher high. This is a higher high. They can draw their fib here. They can wait for price to come somewhere on the 50% or 61.8%. Have a buy limit order here, like this, trading buy limit order, and to be executed with their risk somewhere either below 78.6 or 100%, and they take profit somewhere here at the last broken swing. So that's the way we trade. All right, I'm telling that because I see lots and lots of new traders. They join us in this session. That's why I just went through again about this, how to trade. So next one, FTSE. Again, we make a new high. We were expecting this market to come here to the area we marked. Market is super strong. It didn't make this effort to come lower. Some people, after they saw yesterday this lower low in the price action on the daily chart, they could put the buy stop order. That's a bit aggressive way of trading, but it is still a good way of trading. A buy stop here, a stop loss below this bullish engulfing here. So it was about 60 pips. Let's say now it's 100. It's 1.5 reward to risk. So, but if we didn't take this trade, what can we do today? We see that we have room to go until this resistance. We can go down to the 4-hour chart, 1-hour chart, 5-minute charts, and find the next lower highs, lower low. Now, on the 5-minute charts, we don't take this trade right now, in my opinion, because the market here didn't make a new high. The market make a new high from here to there, but here it just fluctuating around. It's correcting. That's a correcting pattern. Okay, so some analysts, they debate about do we enter on this type of corrections, or we want really a deep retracement? So that comes down to everyone's different plan. Good morning, Emmanuel. You need some analysis on the pound USD. Hey, and thanks for the effort. You are very, very welcome. Dow Jones, of course, is pushing higher. We expected to see some more weakness. We didn't see any lower highs, lower lows on the 5-minute chart yesterday, so we didn't take any trades. Hopefully, nobody took trades on the lower time frames here as a seller, because the market didn't give us the swings. Okay, that's why when you hear me and I say, guys, wait for the 5-minute charts or 15-minute charts to roll over in your direction. If you want to be a seller, you want to see the lower highs, lower low cycles. If you want to be a buyer, higher highs, higher low cycles. So we have to wait for these patterns to appear, so we get with the momentum in the market. Okay, that's a high probability trade. So here again, we have to go down to the lower time frames and find our catalyst and execute, be buyers. Nasdaq, massive push to the upside. Same with the S&P. S&P now demolish this trend line, so we are good to go on the S&P as buyers as well. You see, guys, once the dollar gave us the direction trending, then lots and lots of opportunities are following. Let's start with the pound. Pound US dollar. So market came to retest this. Now we have a new swing in the market. This one, although we are sitting in this resistance, but really, guys, with this trend line here has been broken. Long-term trend line since the beginning of February or beginning of March, pretty much beginning of March, this trend line here. So finally it got broken. So I see that this support, X support, new resistance, not to be that very to stay for a long, in my opinion. Okay, because we have that weakness in the dollar, so I believe that the pound will push more to the upside. Now, and here is the thing: if you are trading on intraday basis on the 5-minute charts, you need the market to create a new higher high cycle above this this line here, this support, because if you just start buying here and you don't have the bullish momentum bias, then where it's going to be your stop? Like traders, they got trapped here yesterday or early this morning. No, it was yesterday. So they were buying here because they thought it's going to be breaking. And yes, it can be break today, absolutely. But if you don't see a clear break and hold above a support, then what's the odds, right? So if someone enters on the 5-minute chart somewhere here, where is the stop loss? Maybe somewhere here. So the stop loss got hit 100 times until this level is breaking. But if you were a daily chart or a 4-hour chart, then if you are trying to buy here, your stop, it's somewhere below. So you have room to move. That's why when we do swing trading, we have more room to move. But when we have the 5-minute chart, 15-minute charts in and out in the market on an intraday basis, we need to apply different methodology and different way of approaching the markets. Okay, that's what I'm explaining you every single day here. The euro created a nice higher high here. That's the most clear so far. The next level of resistance for euro, it's this one here. You can see we have 1 touch, 2 touches, 3 touches. Break with massive volume here, 4 touches. So that's a great level for euro. Just mark it on your charts. So the market now, it makes higher highs. We can go down to the 4-hour, 1-hour chart, 15-minute charts, whatever is the time frame you are trading. 5-minute charts, I prefer 5 minutes for intraday, to be honest, because it's faster in and out. So now we have a new high, higher high. We have some sort of support here. If we draw some fib retracement, we can just have the 61 or 50% along with this trend line, some buy stop orders, and we'll be good to go. So I will keep an eye on that, to be honest, this morning, because I will be around with the charts. So here is my area. Somewhere here, I'm going to have my buy limit orders. USD-CHF, we broke below this. So the next level, it's here. Now for swing traders, we didn't have anything to get involved unless someone put this minor resistance trend line here and they got execute somewhere here with a stop above. But retail traders, I don't think so. They've done that, to be honest. Sometimes we see the move, we understand that the market traded up to that level and reverse, and we could do that, and we could do this, but these are all assumptions, right? It's either we are in the trade or we are not. We understand how the market moved and we get ready for the next one, right, guys? So I don't see many questions. No, actually, I see many questions here. Okay. So we will go through. Aussie US dollar. Yesterday, we had a good trade here. We talked about that on the 5-minute chart. Let me go back to find it. It was this one here. Yeah, it was this one here. We were doing the live and we had the daily direction. It was down. The daily price action was also down. That's the two confirmations we want. And we said that when we have this break, and we had it during the live trading, we had a lower high and lower low here, lower highs, lower low. Anyway, the break, we draw our fib retracement. When we want to sell, we start from the top to the bottom. The retracement, it's going to be to the upside, right? That's why it calls retracement. It will retrace. So from the top to the bottom, the 61.8% gold ratio of fib retracement, it aligned perfectly with these levels here. So we expect it to be appreciated and productive by the majority of traders. And the market fluctuated a bit, but later on, before lunch, before the US Open, gave us the profit. So that was 1.5 to 1, and at least it was good for me, this trade. I hope you guys took it, and you also make sure you took your profit out when it was time. Okay. So today, the Aussie, as the rest of the pairs, is on the uptrend clearly. Next level for the Aussie, it should be somewhere here. So room to go to the upside. That's how we approach trading, guys. We are patient. We take some days, we're going to take one trade, or some days we know that we want to sell this currency pair under these conditions, but maybe the opportunity won't come. Maybe the market will not give us the opportunity to participate. So what? That's fine. We just be patient and we move on to the next one. Kiwi, the same, bullish engulfing. We will be a buyers here everywhere. USD CAD, very, very, very clear, guys. Keep an eye on USD CAD as well. 5-minute chart to sell it when we have a new low, lower highs, lower low on 15-minute chart to sell it. However you prefer to do it, doesn't matter, as long as you understand that bearish engulfing, we smack below here and we have room until this area that I mark you on the chart. All righty, let me go through some questions. Good morning, all. Good morning, good morning. I need some analysis on the pound USD. We've done it. Hey, and thanks for the effort. You are very welcome. Good morning. Yesterday, the fib zone messed a lot of people. Winnie, which fib zone are you talking about? The trade we were analyzing the Aussie US dollar. Please let me know. Good morning, Winnie. Euro USD, Euro CHF, and USD CHF, please. Let's have a look at the Euro Swissy. It's hovering around this resistance, really, guys. I don't know if this is going to sell off. On the daily, the direction is not clear. So what can we do if we want to get some understanding, better understanding? We can flip on the weekly chart, of course. What do you see on the weekly chart? If I ask 100 traders here, do you believe that someone will see this market as a downtrend or as an uptrend? The price starts from here. Let's say, let me zoom in a bit. The price starts from here and then it goes down. So what's the direction? It's a downtrend. Yes, okay, Theo, it's a downtrend, but now we are here. We are not in 2021. We are almost finishing with 2022. What are you talking about? And you are right. The market It's in a clear downtrend in the long term. In the short term, the market is also in a downtrend. In a very short term, the market is retesting this resistance here. Now, should we sell or should we buy, and where? If you see it from a longer perspective, you draw your fib retracement and you know that you are around this area of resistance here, this low point, and this align with a 50% retracement on the weekly chart. So what can we do here? If some people, they see this as buying signal on the daily chart because of these higher highs and higher lows, but they didn't understand that, okay, that was a buy signal up to this area here. Now the weekly, maybe it's going to roll over and we're going to continue the weekly long-term downtrend. So if we draw this trend line on the daily chart and we see where the market make the swings, why we draw trend lines? To see where the market make higher highs and higher lows in an uptrend and lower highs and lower lows in a downtrend. So here the trend line has been broken, and it's a valid trend line because this created a new market structure. Now the trend line is broken. So what's next? We can check if we have a pattern that we recognize. It's like we have this downward move. Now, I wouldn't be a buyer at this point, really, because there are many things that they don't support on the daily chart, on the weekly chart. They don't support buying pressure. So would I be a seller? No, on the other hand. Why? Because I don't have a pattern that I recognize right now. But if the price is going to push here and it's going to be rejected here, then I will see at that point what I'm going to do. But there are so many other pairs that they have crystal clear trading signals, and it's easier to stick with those. So did I miss the ES or NQ analysis? S&P 500 and NASDAQ? Yes, Sufini, you missed them. We've done them before, so please have a look at the recording later, and it's going to be uploaded on YouTube. I think as soon as we finish from here, just 5 minutes later, it's uploaded on YouTube. Job, good morning. Gold price is seeing a brief so-called book flag formation on the daily time frame. Mr. Josh, let's have a look. Yes, it looks like, however, to have a complete pattern, tradable pattern of the flag, we need to see some kind of this formation, right? Do you agree with that? We need to see this. Let me highlight it a bit. How can I make it thicker from here? So you need to see this type of move. You need to see the price to come just to have a complete flag pattern. Now it looks like it's a creation of the pole of the pattern. Yep. So that's very good. Thank you for spotting that and mentioning that to everyone here. So gold price make higher high, definitely. Let's see. We had also this trend line had been broken from the daily chart again early March, or from beginning of end of February for some people. Anyway, that's a long-term trend line to the downside. We have this push to the upside. We had taken out some of the market swings here that they create double bottom formation. Remember, guys, I said that in a downtrend, when we see this pattern that called descending triangle has bearish implication. However, I make it crystal clear to you here that when we see this pattern, descending triangle, right on a strong support, it works opposite. It works as a bullish reversal pattern. Okay, we didn't trade it because it's very aggressive. However, right now we acknowledge that we are in an impulse move to the upside. The next area, it's this one here, these high points here. Next area of resistance. Plenty of room to move to the upside. 4-hour charts. That was a Paul flag completed pattern. For those who are wondering, that's the pause. That's the flag here. Creates like a flag. And then it just pushes to the upside. So there is a buy, there is a stop loss here, and 2-to-1 or 3-to-1 usually works good for poles and flags. Flag as well. So if we go down to the lower time frames, we can wait for our catalyst to appear, and then we can execute. So pretty much that's it. Simple and effective. We need, excuse me, guys. Winnie, with which fib zone you are referring? Sorry, I still don't understand which one you are mentioning in which currency pair. So guys, that's all. Any other pair? Bitcoin is just trying to push and retest this trend, this support here. We will see if it's a strong. That's one of the strongest support on Bitcoin, the 17.5. Crude oil, it's trying to make its way up as well. We will see what will happen. Yesterday, we had this sort of rejection here. Now with a weak US dollar, all the rest, they can push to the upside. I don't see any other questions here from you. So I think it's time to finish this session for today, guys. First, I would like to thank everyone for your participation. As usual, you are an amazing audience. It's my privilege and pleasure to host this webinar on a single daily basis for you. I hope you gain lots and lots of value. Please, guys, make sure if you have any questions, comment, leave them on the YouTube channel below when on the video. Please like and subscribe on the channel as well. And if you would like to make a small effort and like this video, if you are on YouTube, doesn't cost anything, I believe so. For those who watch us through the Zoom, please make sure you leave your feedback right at the end. It's important for myself and for the team to know, what do you believe we do right? What do you believe we can improve? Any comment, any feedback, it's very, very welcome and appreciate. So, ladies and gentlemen, I would like to wish you a lovely weekend, happy trading for the rest of the day. And I'm looking forward to see you again on Monday at the same time. Thank you so much, and bye for now.